Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live in New York City from SmartCon. Joining me for this segment, we have Omar Azhar. He's Vice President of Business Development at Matter Labs. We're here to discuss the convergence of TradFi, ZK infrastructure, and how tokenization will unfold over the next few years. Omar, it's great to have you with us.
Thank you
Welcome
for
to
having me.
Trade Talks. And before Matter Labs, you worked in EY's technology group, capital markets group, and so forth. What was the inspiration behind transitioning over to the DeFi space?
So working at EY, I was there for a little over a decade, working consulting, banking, capital markets. It really gives you a very good inside look at how the nitty gritty like infrastructure actually works. So the first half, for the first 5 years, I was quant building risk models, both for the banking side, investment banking side, and went through the whole CCAR, Dodd-Frank modernization, data transformation. And then the second half, when the first LLMs and AI started coming out, I was working on that and trying to bring, large transformational projects. So, okay, how do you use AI? So it gave a really good view on, okay, this is very difficult to do. Like for any bank or financial institution to take on a new tech transformation, a new technology and enter into a new era, it's a multi-year process. The reason for that is really because, each bank has thousands of systems. They don't necessarily talk to each other. It's all batch processing. A CFO to get a quarterly report can take weeks. So no one really has a live view of what's actually happening at any one time, which essentially means for someone like me in my day-to-day, it's very hard to actually adopt new technologies or new processes. It can take months or even years. At the same time, during the ICO days, I was actually investing, trading, and diving a little bit into crypto. It didn't really make sense to me what the purpose of technology was at that point. But then when DeFi summer came along, 2021, 2022, and you actually had usable applications, and you started saying, oh, these applications are composable. Like these tokens can move from one application to the other, and there's multiple utility of all this stuff. And then I was mostly on the Ethereum side of the blockchain world. It clicked in me that, oh, this stuff that I'm kind of just almost like a hobby almost, that I'm kind of just exploring and spending some time in, actually does solve a lot of the problems that I'm facing in my day-to-day work at EY. And from there, I like this blockchain technology and Ethereum is like a step function up in terms of how we think about building financial products, how we think about information flows in the banking world or capital markets world. And I have to just dive deep in because this is definitely the future. And I saw Matt and ZK Sync were hiring for roles, and I felt, okay, I can probably do this, and I have not looked back since then.
I mean, it has to be refreshing removing a lot of those silos, right,
Yes.
at the end of the day. So that push to scale real world assets on chain and tokenization and so forth, it's starting to gain traction. What do you see as the most compelling drivers right now for institutions to adopt this model?
Yeah, I think for any new technology, it has to impact the bottom line. And it has to be very clear how it impacts the bottom line. And I think that the two biggest ones that I can think of right now for institutional adoption of tokenized assets is really, okay, on the first hand, you have efficiency gains. And on the other, you have this whole new potential 10x in business growth through the composability that tokenized assets have. On the efficiency side, you can think of it as right now, trade settlement. You still have T+1, T+2, T+30 sometimes, depending on the trade, the different counterparties. By tokenizing those assets and tokenizing the activities on chain, you kind of almost take care of all the settlement issues, which also then means reconciliation. I think there's plenty of surveys out there that show reconciliation costs is about 30 or 40% of back office costs. Now imagine if you take all that out and instead you could use it for productive means instead. So that already is going to impact your bottom line just from efficiency gain. However, a big tech transformation, you're never going to sell it based on just the efficiency gains, right? It has to actually open up new avenues of growth. And this is where tokenized assets are also phenomenal. And we've seen that so far this year and starting last year with tokenized money market funds. Now people are moving other types of assets on chain as well. And the real value of this is not so much as in, okay, it's tokenized now and it can move 24/7, but the composability of that nature. All of a sudden now, you're giving additional utility layers to these assets that weren't possible before, because a tokenized asset, you can move in and out into any type of on-chain market. Markets that these assets were not being used at all. For example, take the tokenized money market funds. Initially, they came on, and it was mostly on-chain treasuries are investing because now they can invest in safe money market funds rather than just holding their assets in stables. Now, all of a sudden, we're now talking about, okay, on-chain treasury management for large corporates. What does that really mean? Well, instead of holding it into like a large corporate like a Google, Amazon, etc., they'll have thousands of bank accounts. They don't have access to 24/7 money movement even internally. And so they have to hold a buffer. And that buffer could be anywhere from 20 to 30% of their balance sheet that's just idle capital. That's not doing anything. It's essentially a cost. But if you have tokenized deposit, banks tokenize their deposit, all of a sudden now you can start moving things 24/7. You don't need to hold such a large buffer if you're a treasury function at a large corporate. But on top of that, you can also have a money market fund, and now all of a sudden you're doing cash sweeps like instantaneously. So anytime assets are just, so your cash is sitting there, it's earning yield by being in a money market fund. And anytime it needs to move around, you immediately swap it to a tokenized deposit or a stable coin, and you can make payments. So that's a real world example of, how is the composability of tokenized assets actually going to change a lot of finance. And this is great for the banks, because now they have 24/7 money movement and they can compete against stablecoins. But it's also great for the large corporate customers, because all of a sudden now you've made a function that is, considered potentially like a cost to now be potentially revenue generating.
Yeah, well, it's so interesting because you had said we understand blockchain drives efficiencies, but what's the real value, right?
Exactly.
That's a conversation we're having around AI right now as well. Brought up AI and LLMs before, so I just think it's interesting, that connection there. Let's take a step back. Let's talk about ZK Think and Matter Labs. You've been focused on building modular ZK powered infrastructure. What sets you apart in enabling large scale applications?
Yeah, so at ZK Sync, we like to say we're building incorruptible financial infrastructure. Why is it incorruptible? Because at the end of the day, verifiability is incredibly important. Can you verify your solvency? Can you verify what you are doing is actually correct? Can you verify this trade actually settled? Can you verify you actually have the assets you're claiming to have? But can you do that without actually losing privacy? And that is what we're using with ZK, with zero-knowledge proof technology. Essentially, being able to verify to anyone that, yes, what I am doing is correct, and these are the assets that I actually have, but I don't need to show you any data. And what does that actually mean from a practical standpoint? We are essentially enabling institutions to come on-chain onto Ethereum, but on their own terms. Essentially, build a layer 2 with ZK infrastructure. It's fully scalable. Now with our latest Atlas upgrade, scalability is no longer a problem statement, neither is privacy. It's, you completely own everything about it. You can design who can come in, who cannot come out. It's full privacy. You can have selective disclosures with your regulators, or your auditors, or third parties. And also the nice part is it's very cost efficient and cloud scalable. You could do anything from a small application to a very large 15,000 plus TPS or Visa scale application, all within the same layer 2. And it has interoperability with Ethereum, as well as with potentially your counterparties as well. So you can directly access the liquidity that's sitting on Ethereum. You don't have to bootstrap your own liquidity, but you have your own execution environment that, hey, for these types of transactions, these types of use cases, I need full compliance and privacy. I don't want to interact with Ethereum. And that's really what we're getting. And a good example for this would be, back to tokenized deposits. We're working with a lot of different banks that want to start moving into tokenized deposit space. But what do you need for that? Well, one, they would like to build it on top of Ethereum because obviously there's large capital markets there, but this has to stay within the 4 walls of a bank, which means you need privacy, you need full ownership of the execution environment and the blockchain, and we're providing that. And then this is essentially going to be infrastructure that is going to connect to core banking infrastructure, enabling them to tokenized deposit. They can start moving money 24/7, and then they can start going into composable DeFi and start thinking, okay, how do I expand my services to my customer base?
So help us understand the ecosystem a bit more here. ZK Sync, you're working closely with infrastructure providers like Chainlink to ensure secure data, cross-chain interoperability, and so on. How do collaborations like that help to advance scalability and interoperability?
So how's the Chainlink?
Yeah, like partnerships like that. How does that help to advance scalable and interoperable solutions?
Right. So I would say there's multiple layers from a technology and product standpoint that you have to consider when you are doing scalability and interoperability. It's not just purely of, can I move data around very fast? It's also, can I move data around very fast in a compliant manner with KYC, with transaction monitoring, with all the other additional bells and whistles that we don't normally think of. But when you're actually building these products, you have to have them in place. And so we've been working with the Chainlink and that team for a number of years. It's been a very great partnership. They help bring in all the different additional layers, like the orchestration layer. They also have CCIP for interoperability as well. And, they essentially help you get from a 0 to 1 very quickly because everything is already there. So we come in building with the incorruptible infrastructure. So the blockchain infrastructure and interoperability and access to Ethereum. And they also come in with a lot of other things. So for example, oracles, data feeds, all the other things that you need to actually move something into production very quickly. And it helps with the kickstarting the product base.
I mean, but you need that if you want to integrate with TradFi, right? So when you think about
Exactly.
the convergence of TradFi, the ZK infrastructure, tokenization, what does that look like as you think about the next 2 to 3 years as an example? What are some of the key milestones we should be watching?
I think one very obvious to me is how do you integrate the on-chain world with the existing reporting infrastructure of TradFi? That is something that I think different people like Chainlink and us are going to solve. And without that, it's very hard for most of the market to go on-chain because there's different audit requirements, there's different financial reporting requirements. How do you translate on-chain transactions into that same world? I think that is one thing that has to be done. On the Zk Sync side, I think what you'll start to see is we're going to start moving a lot of these projects that are right now currently with banks on things like Tokenized deposits from MVP and testnet over into production and start moving actually their corporate clients into on-chain treasury management solutions. You'll start to see that go into production in the coming months. So that's purely on the privacy, blockchain side of the house. On the public blockchain side, I think we already have a little over $2 billion in private credit assets through Tradable. That's on one of our main nets. You'll start to see that also being more fully on chain. And what I mean by being fully on chain is the distributions are being done on chain. The underlying assets and their cash flows are moving on chain. So you have much more transparency in like these private credit loans, essentially, that doesn't necessarily exist that well in the current paradigm. And once that's on chain, that means all of a sudden you can start using it as collateral on things like Aave, for example. And now you've got additional utility for these assets. So when that starts to happen, and it'll be very, very soon. This is like weeks and months. We're not talking about years anymore. But I think the pace of innovation is rapid. One thing
past 12 to 18 months, the conversation has shifted.
Very
I think
much
a lot
so.
of that is understanding, the regulatory framework in your operating environment, especially you coming from a capital markets background and having that experience. And so you're able to understand the convergence and what needs to happen in order to execute
Exactly.
on that. But, without having that framework, you can't get A to B.
Yeah, I think one of the great things that I've learned in my past life is these tech transformations that are step function changes how the world operates. They generally are 5-year cycles. In that ever since I've been at Zk Sync, it's been a 10x improvement both for Zk Sync as well as the industry in general, both from a performance standpoint, so scalability, the underlying hard tech itself, the usability, the user experience, but also from the use case and the business value. I think previously it was okay, DeFi is very cool, and then okay, stable coins are very cool. Now all of a sudden, oh wait, there's all these other types of tokenized assets that we can bring on chain and make them composable. And you're starting to see that rapid shift. And I think it's going to continue being a 10x each year, which is really exciting from a business value standpoint. Like, okay, how do you actually make money? How do you actually use this hard technology? How do you actually use it in a way that my regulars are comfortable with, my shareholders are comfortable with, and everyone sees the value being done? So that's very exciting.
Back to your point from the beginning, yes, we get the efficiencies, but where is the value?
Exactly.
All right, Omar, appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me from SmartCon. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.